Hey everybody, I want to take this time to really discuss and share about other people that seem to be outside of the whole doom and gloom dollar collapse, perma gold bull people. And you have these pundits, you have these gurus in so many aspects that can be wrong and very unreliable for years and even decades. And it isn't just people like Peter Schiff, Marc Faber, Greg Mannarino, SGT Bull, Harry Dent, and all these types of people that keep giving you doom and gloom. They're also the ones that promote or continue to spew out that stocks are always great, great time to buy, we're rocketing, things are great, you got to jump in. And yet they won't tell you the times to sell when the market's about to crash. So when it's 2008, they're telling you it's a buy. When it's 2000, they're telling you it's a good time to buy. And when you look at these factors like Dow Jones, NASDAQ, when it's going to get bubbly, if we may have an event like that pretty soon, I don't know, 2017, 2018, they'll tell you to buy, buy, buy. And then what will happen is when you buy, the markets will tank. So they were telling you buy this year, last year, and you probably did a pretty decent job, but they won't tell you the right time to sell. And so this is how a perma-stock bull works. Okay? So you have two angles, or you even have the middle, but they still are not reliable. Okay? You only need to understand when's the right time to buy and sell, and you have to understand how to shift gears, whether you're in commodities, in equities, in bonds, in real estate, currencies, the list goes on. Okay? So you can have these maniacs in all over the media networks. Now, first of all, do you know this guy? Of course, I believe lots of people that are involved in investing do. This guy is Larry Kudlow. Now, the reason I'm showing you this right now is because I want to let you know that his show recently got canceled, okay? And largely, I believe that his show didn't offer a lot of real value that was going to help lots and lots of people. In fact, he brought in a lot of people that were wrong, that continue to spew out dangerous and harmful information. And nevertheless, he doesn't just talk about investing. He also brings in a lot of, political pundits and politicians and just a lot of these so-called that they claim that they're experts. Okay, so let's see. Now it seems like his show, I believe, recently just got canceled. Okay, it was March 28th, 2014. So let's zoom in a little bit. Okay, as you can see here. And you'll see a lot of these gets that he brings in. He brings in Robert Reich, okay? Another one of these pundits, wrong in many aspects. He's bringing Ann Coulter. He's bringing Ben Stein. Oh, who is Ben Stein? Isn't this the guy that has been promoting the financials back in 2008, that it's a great investment? Look at this. Come on, seriously. And they continue to bring this guy? Unbelievable. Let's also look here. He's bringing in Jeremy Siegel. Oh, I wonder who he was. Wasn't he the guy that was bullish on the stock market in 2000 that helped a lot of investors to lose something like 50, 70, or 95% of their assets? Wow. So he's promoting these pundits. He's promoting these individuals that's providing a lot of dangerous analysis or forecasting. And last but not least, Peter Schiff. Wow. And I believe that Kudlow has seemed to agree with him quite a bit that we're going to lose the world's reserve currency status and the dollar is going to collapse and so forth. So it looks like we just got rid of a program that's just been pumping and skewing a lot of people, putting people in a lot of dangerous positions. Well, I guess you can say good riddance. Wow. So let's see how this guy will really end up. Anyway, let's also look at Jim Cramer. And, of course, he's part of the whole large-scale media, CNBC, Circle Jerk, Bloomberg, Financial Times, Fox Business. A lot of this media is garbage. The street is largely influenced. I believe it's connected or owned by Jim Cramer, the pump and dump maniac. And, he has also connections with, Yahoo Finance contributors or people that are involved. A lot of these people that I can't remember their names, but I believe the street has also interviewed Mike Maloney, Peter Schiff, a lot of these pump and dump maniacs. So as you can see here, he's stating that Yahoo is not the way to go on Alibaba. What does that mean? Many investors think Yahoo is the way to benefit. Okay, well, excuse me, Jim Cramer. Didn't you tell people a while ago that it's not a good idea to get into Tesla? And look what Tesla did. Tesla did a pretty darn good job. Wow. And you're telling people Yahoo is not the way to go? You see, and of course, Cramer is more of a perma bull. This guy, I believe he's wrong almost every single time. Usually when he tells you to get into companies, they usually crash. And usually when he tells you to avoid certain stocks, the opposite happens. They skyrocket. So when you look at his advice on Tesla, it looks like Yahoo, which I can't guarantee, is going to rocket with Alibaba. And one of the reasons it's been rocketing for several months is because of Alibaba. So people, think for yourself. Looking at his tracker, do you think that it's really worth it to trust Jim Cramer? I don't think so. Okay? So let's look at here. Look at this. I mean, CNBC is continuously promoting this guy, Jim Cramer. Wow. Isn't it just so shocking? Literally, when I look at CNBC, to me, it's really like a comedy show. It really is. And of course, I saw a little bit of it. He was showing technicals. He was telling people that, S&P is struggling to move above. Well, usually it's been always struggling to move above. Just because it's struggling to move above doesn't mean that it's going to crash and it's going to really collapse. I mean, come on. I mean, this guy is probably one of the most dangerous people that are involved in finance. I wonder why a lot of people haven't done anything about this. This is a guy, remember the infamous one telling people to get into Bear Stearns around early 2008? Do you guys remember what happened? Huh? Do you? So, you guys really have to understand. I wonder why, the authorities like the SEC and FIRNA is not going after all of this. All of this mess that you see here. Fast money. I mean, this is the show that's been wrong on many occasions. Look at these people that this media network promotes. Stay invested in stocks and commodities. So, look at this. He's promoting commodities. He's saying that it's going to be doing very well in the second quarter. How do you know that? Just because they're doing well in the first few months doesn't mean that they're going to do better. So it looks like that they're pumping commodities. And it's kind of shocking to me that people would be bullish on both. Because usually it's one that does better than another. Okay, commodities did well from 2001 to 2011. Stocks have been doing well since around, I would say, 2011 or 2012. And stocks have been doing very well since the early 80s until the year 2000. So usually this is why you have to shift gears. Okay, one is going to do better than another. So look, a lot of these people, they just don't know what they're really talking about, people. Give me a break. I mean, it's just so unbelievable how people continue to take these things so seriously. So, again, you can see here really a lot of these pumping going on. Buying opportunity. Look, it's like they're buying equities. It's unbelievable. All right, now I want to look at this article. This is the one that just recently published, and again, the media can be right on many aspects, but they don't tell you a lot of things, and they also still continue to promote their advertisement. Excuse me for this. So you can see here they give you, statistics. 44% are underemployed, a lot of college graduates. And you can see here that dressing inappropriate. Look, people, you see, CNBC wants to blame that the media socially is the reason why. They're texting, they're unprepared. Look, people, let me explain to you why I believe these so-called millennials are having a difficult time landing jobs. And I largely blame the trade policies. The trade policies took a lot of good paying jobs that people could get after high school away as we continue to outsource our work. And that also not just in the factories, but even the mom and pop stores. So we see a lot of chained stores that coming along, and you see a lot of factory jobs shipped overseas. So a larger percentage of good paying jobs went to white collar positions, which became more competitive, and over time employers raised their pool of requirements to soften out the competition. Or there's a number of reasons, because you can say employers are shills for the college industrial complex, or you can say that there's a lot of legal aspects that came along. They have to hire people with a certain level of credentials. And so you can see here, they also tell you that it's not here, but in another article that happened in CNBC, they also mentioned that millennials who graduate from college fare better on. Yeah, okay. Well, does that factor in student loans? And from what data are you looking into? What research have you done? And does this mean that everyone will benefit? And does this mean that just because if you don't go to a 4-year, does that mean that you will do worse off? Because here's the thing. You see, a lot of these people that just graduate from high school, they lack confidence. They lack motivation. So if they would have confidence and motivations, maybe they'll actually earn more. You see? These are other things the media doesn't promote. So again, the media still promotes the idea that it's better to go, but they're all telling you, oh, they're saddled in debt. You can see the manipulative psychology. You can see that in a way they're kind of shilling for these sectors, for these so-called profit makers that are profiting from student loans and charging them so much interest. It's just so unbelievable. And yet, let me tell you something, people. It won't surprise me that soon, or I guess you can say now, I'm having a 5-figure net worth, and the people that are from my high school, they're coming with 5 and maybe 6-figure student loans. Huh. And this is going to be pretty shocking because I have told lots of people in my high school that you better watch out what you're getting into. Because, again, the fact is, a lot of them didn't take this advice seriously, and you're going to see this drag on in society for years to come. Okay, anyway, I'm here to tell you, a lot of these perma bulls are all over the place. Hopefully I'll have the time to expose a number of people. This is another guy who's another perma bull, James Altucher. You can see in 2008. So, look at this. The Dow Jones is going to 20,000. You see right here, the Dow Jones is going to 20,000, but don't buy stocks. Yeah, well, why not? I mean, come on. It's kind of like he's telling you that somehow he wants you to avoid making possible gains. See, the media wants others to suffer while the very few benefit. This is how these things work. It's to benefit their advertisers. It's to benefit insurance companies, trading platforms. It's to benefit precious metals dealers, certain corporations. It looks like this guy is probably none of these pundits that are really dangerous. So why shouldn't we buy? And look at this. This is 2011. If you bought stocks, you would have made huge gains. NASDAQ was below 3,000. Now it's over 4,000. Several companies, almost all of them, not the ones that are related to commodities, have skyrocketed out of control. So, anyway, let's look at this guy. I want to see you take a picture of this guy. I mean, come on, seriously. How can you possibly take these people so seriously? Unbelievable. Look, I don't know really what to tell you. And this guy, he's probably going to tell you the Dow Jones is going to 25,000, 30,000, and you know what? Probably it will peak at 22,000 and then it will crash. And then you will really know and really understand who these people are really about, okay? You either listen to the people in the media and walk along the woods quietly, or you either listen to people that actually do research, that are not connected with advertisers, and actually work for you, and that you actually have somebody to talk to, somebody to possibly rely on. Okay, another one of these guys that I want to talk about that seems to be a perma bull on the U.S. stock market is James Altucher, the guy that kind of has like that weird, crazy hair. And this is really the thing that you kind of have to understand. Let's just look at one of the interviews that he had about a while ago. And so you can see here, this is from April of 2011. Believe it or not, that was actually when silver prices peaked. And so you'll see here how in this article that he has, the Dow is going to 20,000, but don't buy stocks. Well, let me tell you something, people. There are some things I can agree, and there's a lot that I do not find pleasing, and a lot I disagree here. Okay? First of all, I'm certainly positive on the fact that it is going to 20,000, but is this guy going to tell you when to get out? So in other words, he's telling you that it's going to go to 25,000 when we hit 20,000. And then in fact the market peaks at 23,000, then we go to another bear market. Then that is the time when it will be too late, and you might as well realize that these people are pretty toxic in their advice. And so this is the thing that you kind of have to understand. But again, why not stocks? I mean, you're telling the market's going to go, so why not buy stocks? I mean, is it like you just don't want others to benefit? You want others to kind of miss out on the gains while a small percentage of investors actually benefit? I mean, this is the thing, people. The media, when they promote these people, they largely care about their ads. They care about trading platforms, insurance companies, hedge funds, precious metals dealers, corporations, the list goes on. This is why you need to understand the media is not a very reliable place for information. Large scale, mainstream, alternative, you name it. Very, very few groups and individuals are actually reliable. And so you can see here how he has an interview with Task. Task, by the way, I believe I've showed you before about the street Jim Cramer. Task actually has connections or work for him, part of the whole pump and dump. So you can see they're part of the whole circle, mafia bash thing. You can see their whole gang and who they have really connections with. But anyway, you can see here since 2011, a lot of stocks like Yahoo, several of them have skyrocketed. Okay, so he tells you, well, not to buy stocks. Well, let me tell you something, people. I can assure you that if you're looking at stocks that have very good correlation with the NASDAQ, Dow Jones, the major indices, they are very likely to buy as an opportunity. Okay, this is the thing that you kind of have to understand. Then you also have to look into earnings, not just correlation. See, he doesn't tell you that. He just gives you these aspects to be pessimistic about, which some I can agree. Now, first of all, you say 10 to 15%. Based on what? Says who? Because if you bought Tesla, Yahoo, Best Buy, Fannie Mae several months ago, you would have made 10, 15%. So who is this factoring in? I mean, come on. It's mostly a scam. Insider trading. Oh, yeah. Okay, sure, yeah, there's problems, but what should we do? Be wusses and not get in? Come on. Yeah, he states Enron. Yeah, okay. What's the chance of that happening? Very, very low. I mean, come on. You really have to understand and think outside the box. Now, of course, he says, you see, this is something that I can agree on. Index funds or close-ended funds. Now, I don't know. I guess he's trying to refer to as ETFs, exchange-traded funds. Okay, but does he list any exchange-traded funds? Well, doesn't look like it. And why? Well, basically, I don't know. I guess he is having his own self-interest. He wants people to get slaughtered. Who knows? Because I can tell you that a lot of exchange-traded funds, there's one called QQQ, which is the NASDAQ, and there's also one called TQQQ, which is 3 times the NASDAQ. Those are ones he can get to. Why doesn't he list those? I guess he really doesn't want you to really find out. I mean, come on, people. Now, of course, you can see that almost all companies did very well since 2011, with the exception of the ones that had really bad earnings because it was obvious, or the ones that were related to commodities, like mining stocks. So they did well overall. So, again, this guy is not listing enough information. He is simply giving a lot of partial truth, and this is why you need to stay away in terms of finding these outlets and these people very reliable. Okay? So you can see here he doesn't list some stocks are probably a good idea, and of course he doesn't list the exchange traded funds. What exactly is he talking about? Okay? So he kind of doesn't give you a lot of specifications. So let me kind of point this out. People, the bottom line is you need to basically focus your time and energy with working with people that actually do a lot of research, okay? Instead of people that just simply just sit there and just talk and talk and talk, go to seminars and are salespeople, but don't actually research and discover what they're talking about. Okay, so you'll see here he has another article based on him that he talks about. Here is why the Dow is still going to 20,000. And, this is the article around the same time with the Tech Tinker Yahoo Finance interview. He also talks about 20,000, but this one, it states 18 months. Well, this can show you his predictions were wrong. And you'll see here CNBC promoting him. As you can see here, this is, I believe, Fast Money, where they interview a lot of doom and gloom people and perma-bull pundits. So as you can see here, in about 18 months. And as a result, it happened in 18 months. How about more like, I don't know, maybe if you said, geez, 68 months, that probably would have made sense. 48 months or so, that would have probably been more reasonable. but it didn't happen in 18 months. So you see that these people are all about creating this hype, pumping things up, being wrong, and creating all of this unnecessary optimism. So you also look here, you'll also find that these are pundit trackers, okay? And they gave him a D minus. Now, I don't know about this site. I don't know if they're reliable or not. But of course, some things that they say and point out are facts. So he predicted, according to the site, Apple will be a $1 trillion company, which didn't happen. Dow 20,000 by February 2013 didn't happen. Dow 20,000 by end of 2012, it didn't happen. Now, of course, he's probably made some predictions. Of course, they're not right or wrong 100% of the time, and you'll see a number of their predictions as well. And you also look into right here, Jim Cramer, Norio Rubini, all these other guys that have been wrong many occasions, and you'll see their track record over here. So take a look for yourself.